G'day everyone, welcome back to Pete's Investing. Today's June 27, 2023. This is the US dollar basket update. On a weekly, we're in a bearish momentum, likewise on a daily and on the hourly. Although we've got this bullish divergence, so we had a bit of an upswing and we've hit our target, and I'll go through that in a minute. But predominantly we're in a bearish scenario on all three timelines. First off, on the weekly, we've got the triple moving average, the double moving average of the CCI 150, and our oscillator, which is showing a bearish signal. So predominantly bearish trades based on the weekly. Likewise on the daily. But you'll notice as well, we skidded off this support line at 10.050 a number of times. Looks like we're coming back towards it. There is a bullish divergence here on the CCI on the daily versus a bearish divergence, and we've got a short-term target, an upside target potentially in that little area there, and that will be the Fibonacci range if we draw it up amongst this bigger time frame. Now, for this to work, we need to see it break above this channel. If that trend line was to increase or to lengthen, we need to see the price break above that before getting into that target area. But predominantly we're looking at short periods or predominantly bearish periods on the daily and weekly trend line. And the divergence are standalone trades on their own, so we don't really look at the trends for those. On the hourly, we've also cut a couple of we had a couple of divergence back here, a bearish divergence on the CCI versus a bullish on the price chart. It broke below its channel, and we had a target range in there. That was the closest target range of the Fibonacci range between that low and that high, and we had a secondary target which it hit eventually as well. More recently, we've got this bullish divergence and a bearish divergence on the price chart, and for this to work, I'll draw the channels and the parameters. So if you draw a channel between that divergence range and bring it up to the highest candle within that divergence range, so you can see there when it broke above that channel, then we put in a target price. And we go to one of these recent highs in terms of Fibonacci retracements, so you go from that low, let's go back to this recent high. So you can see there it would have hit that target at that point there. So if we drew a target range, I usually pick the closest Fibonacci range for a higher probability of success. You can see there it hit that target area quite nicely after it broke up. But you've got to be pretty quick in this case, because you can see there after the first and second hour it hit in that target range and you would have missed the trade. So some of these are pretty quick in terms of where they get to. I usually go for the closest Fibonacci range above the entry or below the entry if you're going short for a better chance of success. If you go for much higher Fibonacci ranges, then you're really stretching your luck in terms of probability of success. So that's where we are with the on the hourly as well. But again, predominantly trade with the weekly, daily, and the hourly trend line trends when you're trading these. So to understand how to trade some of these strategies and understand the divergence a bit better, subscribe to my Patreon page where we also look at weekly scans of stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.